Hey, what's up guys, and welcome back to a new episode of E Creeks Outdoors. This is going to be a quick little one for you guys who like investing, that sort of thing. If you're kind of like me, you're interested in seeing how you can become part of that 1%, just so you can have that financial freedom to do what you want in life. Hopefully one day I can make YouTube videos for a living. So if you want to figure out what to do with your money when you're young, how to put it to use so you can have a lot of money down the road, I'm going to tell you guys some first investments that you need to make or that you can make to give you guys some ideas. This is all stuff that I've done. I'm no expert. Like you watch those investing videos and they always say, I'm no expert, don't take my financial advice. I don't even know why they say that, because obviously they're not a financial expert. You're watching them on YouTube. So I'm going to tell you guys what these things are. I've got kind of 3 different parts I break it up into here, and let's get started and get into it, guys. So this is how to start investing, some of the ideas you can have to put that money to work. What I do when I get a paycheck is I split it up. I put part for saving, part for spending. Do that, guys. Split it up. At least try to save 10%. When you're young, save as much as possible. Maybe try to save up to 50%, as much as you can if your parents are paying for some things now, or if you don't have a lot of expenses yet. When you're young, you have the ability to take more risk, so put more of that money to work. So the first things, guys, that I have, that I hold, that I'm going to suggest to you is 2 things that you're going to want to keep in a retirement account. This is going to set you up. Start saving now so you can at least retire by when this will be ready. I keep mine in a Roth IRA, which you can get out, I believe, at 59 and a half. At least set yourself up so you can retire there at 60. Hopefully you can retire before that if you do some other things right, make a lot of money, you're successful. But at least get this right, guys. And here's what I have in my Roth IRA. So I do this Roth IRA through Fidelity. They are the brokerage I use. I would suggest for your retirement account to use a very dependable one that's been around for a while. You know it's going to be around for a while. In mine right now, I hold mainly 2 things. These are both mutual funds offered by Fidelity, and they're both what Fidelity calls their zero mutual funds, which means that you don't have to pay a commission on your trades. It's completely free, and there's no, you don't have to buy a whole share. There's no minimum share amount that you have to buy. So the first one, and I learned this one off Graham Stephan. If you like finance, watch his videos. He always pronounces these super funny. It's Finilx, F-N-I-L-X, and that's Fidelity's basically mutual fund that tracks the, kind of like the S&P 500. It doesn't exactly track the S&P 500, but it does about the same thing. It tracks the large cap US stocks, the 500 biggest companies in the US. It's going to track their stocks. Now these zero funds that Fidelity have only been around since 2018, since kind of this more commission-free trading's been popular. The year-to-date return this year on that is 8.23%, which is really good, and it has seen even higher returns from that just since being around since 2018. So the second one is FZROX, F-Z-R-O-X, and this is going to be Fidelity's total US stock kind of tracker. This is going to track the total US market. So as the market moves up and down, that is what this mutual fund is going to track. So far year to date, that has seen a return of 8.77%. Now, the reason you want to have these in a retirement account, guys, is because these 2 things, they track the mutual funds, they track a lot of different companies, a lot of different stocks, and there's going to be some winning years and some losing years. But the thing is, as the market has shown, the winning years are going to outweigh the losing years. The longer you leave those stocks in there, the longer you leave this in your account, the more money you're going to make. So you want to get this started now, so when you retire, those winning years are going to outweigh those losing years, and you're going to have a lot of money. Obviously, you could do this on other brokerages. I just use Fidelity. So you can just look it up. Every brokerage is going to have these 2 things, something like these mutual funds that track either the S&P 500 or the total market. There's going to be ones that do foreign markets and small cap companies, all sorts of different ones. You guys can check that out. I would suggest Fidelity. It's what I use, but there's plenty of other great ones too. Now the second one is kind of an interesting one and may seem a little boring, but it's something I just found, and this is a bond. Now this bond I'm referring to is a Series I savings bond sold by the US government, and right now through April, this is why I'm suggesting this bond is going to give you a 7.12% interest rate until April. So if you buy it now through April, until that interest rate changes, that's what you're going to get, 7.12%. Now this bond is tied to inflation, so it's going to be a hedge against inflation. If inflation continues to go up, and in April we're seeing more inflation, that rate is probably either going to stay the same or go up. If there's less inflation, if we have deflation from now to then, or less inflation, then that rate's going to go down. So what this is going to help you do is make your money worth something, at least keep that worth in your money. You're not going to lose value in your money to inflation. I would suggest if you buy this bond, at least keep it for 5 years, because if you sell it before then, you're going to lose the last 3 months of interest, and I believe you have to keep it for at least 12 months. So, but try to keep it for 5 years. The minimum investment on this is $25, and you can buy these at treasurydirect.gov. So number 3 investment I have for you guys is kind of a pile of stuff I put together. This is the fun stuff. So I kind of called this like crypto stocks risk. So first of all, for my crypto, I keep all my crypto, not all of it, but most of it on BlockFi. Now, what got me interested in BlockFi is these really high interest rates. They were paying for you to keep your crypto on there or to keep your money in their stable coin on there. I'm going to read those rates for you guys right now. Although you can't buy that many different cryptos on BlockFi, like you could maybe on Coinbase, where you can buy like tons of them. They have the big ones, BlockFi and Ethereum. So, or Bitcoin and Ethereum, I'm sorry. Buy them on BlockFi. So for Bitcoin, they have different tiers for how much you earn, but as long as you own up to 10% of a single Bitcoin, which we'll say for like $60,000, about the price for Bitcoin right now, that's $6,000. So if you own $6,000 or less of Bitcoin, which probably for us first investors, you're going to own less than that, you're going to earn 4.5% on that. For Ethereum, the tier 1, this is less than 1.5. or 1.5 of an Ethereum. That's going to be a few $1,000s. You're going to earn 5% on that. And then this is the big one, guys, for USDC, which is their stable coin. That is just like when you put money onto the platform, you're going to put it into a stable coin, and then from there you buy your cryptos from that. So if you're just keeping your money in that stable coin, you're actually going to get a 9% interest rate, which is absolutely insane. So just for reference, guys, the typical interest rate you're going to get from a savings account is 0.06%. On here, you are getting 9% on BlockFi. So even if you don't believe in crypto, put your money into that stable coin. It's going to keep its worth. The stable coin isn't going to grow or anything. It's just tied to the US dollar, and you're going to earn 9% interest on that. Absolutely insane, guys. Do your own research, check that out, but it's really cool. All right, guys, now for stocks. This is where you can keep these in your retirement account. You don't have to if you don't want to. Maybe this is kind of your fun. You're going to pick some companies that you like. Maybe you like Adobe. Maybe you like Apple, Tesla. Maybe you like, I don't know, some small bank in your region or something, like some company you don't know. Find those companies that you believe in. Make sure you do your research and buy some in that. You can keep this just in a secondary account. So like maybe you make some gains, you can sell off. Definitely the thing with buying into stocks is it's best to do dollar cost averaging, which is you're going to keep buying in over long periods of time. So you're going to average out how much you're buying for, so you're not going to buy real high or real low. If you keep buying over, say, a couple months term of a stock, you're going to get a nice average price, and the longer you hold that, guys, the more money you're going to make in general. Guys, these are the best first investments I have to give you guys. I have done all of these things on here. This is coming from me. I'm no expert, but make sure, guys, first get yourself set for retirement. Invest in that Roth IRA or whatever that retirement account is for you. Then, guys, have some fun with it and start investing, guys. Build that wealth. I'll see you guys next time on another episode of E Creeks Outdoors. Thanks for watching, and peace out.